And look, every single bank in America is staring down something genuinely terrifying right now. And I'm not talking about another housing crisis or some crypto bro meltdown, though God knows we've had enough of those. I'm talking about a fundamental shift in where Americans keep their money, trillions of dollars, just leaving, walking out the door of traditional banks like they just realized there's a Costco sample station across the street. The catalyst here isn't the Strait of Hormuz, rate cuts, or pumped up AI stocks. It's Elon Musk. Now, I know what you might be thinking. Of course it is. That man is either saving civilization or destroying it, depending on which tweet you read. But this isn't about Tesla share buybacks. It's not about the SpaceX IPO. It's not even about whatever the hell is happening with his robots building robots. No, this is about something he's been working on in the background that nobody is paying attention to. You see, your bank is paying you almost nothing. The average is 0.38% interest on a savings account right now. And the richest man on earth just noticed. So while the internet has been immersed in everything Elon the last few weeks, he quietly flipped a switch and launched a bank. 6% on your savings, roughly 15 times what the big bank down the street pays you, sitting inside an app 600 million people already have open on their phone. Oh, and there's more. 3% cash back on purchases. FDIC insured up to $250,000. He's basically beating banks at their own game while reposting memes 15 times a day. And he's not being shy about the ambition. In his own words, he wants X money to be, and I quote, the place where all the money is, the central source of all monetary transactions. All of it. Every transfer, every paycheck, every bill, living inside the app. And that's not a side project. That's a loaded gun pointed at every bank in America, including yours. So let me show you exactly what he built, why Washington is already very nervous about it, and the one question you need to answer before you get anywhere near it. And here's my promise for the next few minutes. I'm not going to tell you to move your money to Elon. I'm just a U.S. Marine who buys houses. I'm not an economist, but I can read and Google past page 2 because that's all that's needed to start collecting dots and then connecting them. And the dots say this was never really about a savings account. It's about what happens to your bank, your deposit, and the number on your statement the day the richest man alive decides the banking business is just too easy to leave alone. Let's start with what's actually sitting in the app. It's called X Money. Same X you already know, the one that used to be Twitter. Earlier this year, it quietly went from a place you argue about politics to a place that holds your cash. 6% annual yield, a metal Visa debit card with your name laser etched into it, 3% back on what you spend. Send money to anyone on the platform instantly, and your deposits up to $250,000 are FDIC insured. Now that last part has an asterisk, and I'm coming back to it because the asterisk is the whole ballgame. But I noticed something the second I saw that 6%. The number is real. The comparison is the magic trick. 6% is about 15 times the national average, and next to Chase or Wells Fargo paying you a rounding error, it looks like a miracle. But hold it up next to a plain online savings account like a SoFi or a CIT or a Wealthfront. And I have a link below in the description to the top 10 high-yield savings accounts that are already paying 4 to 4.5%. And so the honest version is this. It's a mountain more than your big bank. It's a little bit more than what the smart money already gets. And you can take a look at that list when we're done here. And there is more in the fine print here, because there's always more in the fine print, right? Early reports say that 6% isn't just sitting there for anybody. To get the headline rate, you may have to route your whole paycheck in as a direct deposit, the same hoop the cashback cards make you jump through for their good number. And that might be a big deal for you, but maybe not. The 6% might be worth it to rearrange some stuff. And the full rule book, the plain disclosure every bank has to hand you before you open an account, hadn't even been published as of this recording. So you'd be wiring your life savings toward a 6% that's real, variable, and not fully spelled out, run by an app whose customer service is famously a black hole. That's not a no, that's just a read every single word first. And here's where it stops being a savings account and starts actually being a weapon. Your local bank pays you next to nothing for one reason. It can. Where else are you gonna go? Switching banks means new checks, new direct deposits, relinking every bill, a Saturday afternoon you'll never get back. They're not paying for your money. They're paying for your inertia. Now, picture an app that's already open on 600 million phones. No branches to keep lit, no tellers, no marble lobby, just code. When your cost to run a bank falls to almost nothing, you can hand the difference to the customer and still come out ahead. That's the move. And it points straight at the one thing every bank in America is built on: your deposit, just sitting there, cheap. The word the suits use is sticky. Your money is supposed to be sticky, hard to move. Elon just made it slippery. Multiply that by a few million people who finally got tired of 0.4%, and you don't have a fintech. You have a slow motion bank run with a debit card and a cashback program. That's the loaded gun. And it isn't pointed at Wall Street's penthouse. It's pointed at the regional bank on your corner, the one holding your mortgage, your neighbor's small business loan, the whole street. And here's the part I can't prove, but I'll tell you what I think is going on. When deposits walk out of small banks, those banks don't just shrug. They pull back. They lend less. The loan your kid needed for a first house, the line of credit keeping the hardware store down the block alive, that's what tightens when the money quietly slides into one billionaire's app. We've watched smaller banks wobble every time cash moved fast in this country. Nobody rings a bell when it starts. So the question stops being, ooh, 6%, and turns into something you say out loud at the dinner table. Here's the line I want you to text your spouse right now. The richest man on earth is now paying 15 times my bank, and my bank can't fight back. Sit with that for a second, because it tells you exactly how little your loyalty was ever worth to them. Now, why is Washington suddenly paying attention to your savings account? In April, Senator Elizabeth Warren sent Elon a letter, 13 questions, and she didn't dance around it. She wrote that if X money runs the way X has run, then, her words, consumers, national security, and the stability of the financial system could be at risk. Gave him a deadline to answer. And look, whatever you think of Warren, the questions underneath are the right ones. Number one, who is actually holding your money? Because Elon's app isn't the bank. The deposits sit at a partner called Cross River Bank. And Cross River has been hit by federal regulators twice, once in 2018, once in 2023, for unsafe and unsound practices. That's not a tweet. That's the FDIC's own paperwork. And to be fair, all banks seem to have a run-in with the FDIC at some point. Hello, Wells Fargo. Number two, there's a carve-out in a new law, the Genius Act, that a company like X could drive a truck through, doing bank-like things without all the bank-like rules. And the federal watchdog that's supposed to police exactly this kind of product, its budget got gutted last year. So the cop got sent home right as the biggest new player in the country walked onto the field. That's the receipt. Washington isn't nervous because Elon's too small to matter. They're nervous because he's too big, moving too fast through a door somebody left wide open. So what do you actually do with all of this? Well, 3 moves, and none of them need Elon's permission. Move 1, separate the signal from the sales pitch. The 6% is real, but it's a variable rate, which means it can drop the morning after you move your money in, and nobody owes you a phone call when it does, just like your own bank probably operates right now. Treat the number as marketing, not a promise. Move 2, always know where your money actually sleeps. With any of these app banks, your cash isn't at the app, it's parked at a partner bank behind it. FDIC insurance covers that bank going under. It does not cover the app or the plumbing in the middle freezing up. Ask the folks who used an app called Yada. When the company in the middle collapsed, real people were locked out of real savings for months. The money insured the entire time. The insured, though, doesn't mean it's reachable on a Tuesday. Move 3, and this is the one that actually matters. Use this as your kick in the pants, not your leap of faith. You do not need a billionaire to stop earning 0.4%. Open a real high-yield savings account in your own name, or buy a short treasury bill straight from the government, and you're sitting at 4.5, FDIC direct, or backed by Uncle Sam himself. No app required. If you don't know where to start, I did put that list of the top 10 high-yield savings accounts down below in the description. Let Elon's venture be the reason you finally move. Just don't let it be the place you move to. Not yet. I mean, Elon's not a villain, and he's not a savior. I mean, I guess depending on who you talk to, there's a big maybe next to both of those. But I'm sharing this with you because for 40 years, the deal was simple and quiet. You be responsible, you save, you stay loyal, and the bank takes your money, pays you nothing, and counts on you being too busy to notice. That number on your statement was never an accident. It was the whole business model. Your patience was the product. And the second somebody with 600 million users pointed it out, the whole thing got nervous. The banks, the senators, all of it. That should tell you something. The system was never built to reward the careful saver. It was built to keep you exactly where you are. So here are your two plays. Play number one, you go about your business. You let the headline just kind of wash over you. You leave the money where it's always been, and you keep accepting the tip they hand you for a lifetime of doing everything right. Play two, you look down at your own statement, at the actual number, and you decide today's the day it changes. Not by chasing a billionaire's app, by taking 10 minutes to make your own money work as hard for you as you do for it. As I record this, Elon Musk's X Money has launched for limited external beta testing and early access users, but it is not yet live worldwide for the general public. A formal, full-scale public launch date has not yet been officially announced. But now you know the whole story. You connected the dots and you're going forward eyes wide open. But knowing the move and actually making it stick are two different animals, because if you're anything like me, you've decided to get your money organized about 9 times already. You start strong, life happens, 3 weeks later you're right back where you were, a little more tired, a little more annoyed at yourself. That's not because you're lazy, it's because nobody ever handed you a system simple enough to survive a real life with real bills and a real calendar. So that's exactly why I pulled this next one out here for you to watch next. It's the actual setup I use to make sure the money lands where it's supposed to. The one small change that finally made it automatic for me after years of white knuckling a budget. I'll walk you through how it works, how simple it is, starting with as little as $10 a week, and the little friction trick that makes it almost impossible to quit on yourself. And yeah, it's where that real high yield account does the quiet heavy lifting, paying you something like 10 times what the big bank down the street ever will. Until then, God loves you, and so do I. Take care.